Hey guys, what's going on? Jake at my new YouTube channel, Chain Genius. This is the first episode. If you guys like what I'm saying, click that subscribe button or leave a comment below. And if you don't like what I'm saying or have any suggestions of how I can make this place better for everyone, leave some more comments down below and I'll try to iterate as quickly as possible. Little bit of background on me. Just left my job with JP Morgan, was there for about 2 years as an analyst. And before that, I had a math and econ background, still do, I guess. Pursued startups for a little while, worked at an energy drink company for a little bit, online e-commerce with athletic apparel, moved into coffee subscriptions, and then took a stint at the bank for a little while. So my background's pretty diversified. I've done some marketing, user acquisition, analytics, reporting, business development, operations. So I'm, I guess, a jack of all trades, and decided to recently, as of last week, go full-time in the blockchain space. And I hope you guys will follow me as I take this journey and kind of see what this technology is all about and where the industry is going to be heading over the next couple of years. You know, and part of the reason that led me to make this decision is it's the first time where there's a new technology, I have the right interest, and I'm of the right age where I can actually do something about it. You know, previously I would say the internet was a big one, and I was just too young to really care about it in the right way. And with machine learning and artificial intelligence, I'm just not heavy enough into the theory or the code base. So other than an ancillary interest in it, it felt outside of my scope or my range. So that's why I'm pursuing the blockchain. I've been in the space for about 2 years actively, and I've known about Bitcoin and blockchain since probably around 2010, but just didn't really do anything. I had a few friends that were playing around in it that were Magic the Gathering players and kind of dinged me about it, told me about it. Again, just ignored it. And then around beginning of Q2 2016, I started paying a lot more attention, starting to do research, investing into some ICOs and just buying general currencies and just really starting to get into the space. And then, like I said, the opportunity cost has gotten to such a point that I needed to jump in now. I've had a few friends in the space that have been saying for a few months that I should at least give this a try. In worst case, I can always go back to working a day job. So kind of touched on my background here. And, you know, one of the main areas that I'm going to focus on with this channel is going to be talking about what's happening at a really high level, whether that's daily, weekly news and events, diving into some of the regulatory things that are happening, interesting projects that I find. I love doing research on projects and determining how they're differentiated from others in the space, whether or not the blockchain needs to exist or if it's just been shoehorned. And one of the things I really enjoy doing is looking at the token economics and sales structure, the incentive models, because a lot of these projects, it's just like the dot-com bubble in a sense where everyone's trying to blockchainify everything. And I don't know if my cat food needs to be blockchained. I don't think my cats care if their food is decentralized or not. But there are specific use cases that I think make a lot of sense. And really driving how that economic incentive is set up, how people should use the tokens, why they should be using them over a long period of time is really interesting. And if I'm going to be really transparent, there's very few projects that I see in the space that require a token. And just to do a quick definition for those that don't know, I define coins as assets on their own blockchain. So Bitcoin, Ethereum, EOS, Cardano, Lisk, Neo, Stratus, I can go on and on, Arc, where they have their own blockchain and they have an asset or a coin on top that helps the whole thing run. A token is an asset that's leveraging another blockchain. So that would be any of these ICOs, so BAT token, Deep Brain Chain on Neo, Red Pulse on Neo, Ship Chain. There's tons of them. I can go on and on. But those are leveraging the underlying infrastructure of a different blockchain in order to build their product or service on top of it, or DApp. And I think where I see the most interest with these is being perfectly transparent. I don't think every project requires a token. And the reason I say that is using the iOS App Store as an example. If every single app required me to buy their own special token, it increases the amount of friction on the user experience quite a bit. Then if the company is insolvent or goes bankrupt, I'm stuck with a token that effectively goes down to zero. So it's worthless. Now, I realize my opinion doesn't really matter in the grand scheme of things, that no matter what, the market's still going to create ICOs and TGEs, token generation events, because they're a great way to build an exit to liquidity in a very quick way. Traditional equity markets, they take 3 to 5 to 10 years. You have to wait for a merger acquisition or an IPO. And in the token space, you can raise quickly, and as an investor, you can gain liquidity quickly. And just like all asset classes, there's various levels of risk, and I consider ICOs, TGEs to be higher risk, but there's also a much higher potential for reward. So those things all have to be balanced. And going back to the economic side of things, I'm okay. I'm a very risk tolerant person. I mean, I just left my job at a bank to do blockchain full time. But that being said, there's ways to mitigate that risk. So I don't recommend, and I don't personally go like all in on a single ICO. I don't YOLO in, because that's just a terrible idea. I try to de-risk where I gain a decent amount of exposure to upsides and projects that I really enjoy. And I also mitigate really bad downsides, like when the market just took a huge dump this past month. But that being said, even though I don't always agree that a token needs to exist, there's a couple use cases that are very clearly worthwhile. That would be governance, which is the token allows me to control where the project roadmap heads. I get to vote on technological implementations. Voting rights, where I get to maybe determine the course of action that a company takes or assign a new board member or the CEO, similar to a traditional stock, or profit sharing or revenue sharing, which would be dividends for stocks. And for those playing the home game, that is very, very close, if not exactly the same as a traditional security. And securities are not necessarily bad. Where I have more of an issue with securities is when they are trying, so in the US, since I'm a US citizen, to buy and sell securities, you have to be an accredited investor. And the problem I have with that as an accredited investor is you have $1 million liquid in assets, not counting your house, or you make 200 grand for the past 2 years with an expectation of making the same or more on the third year. That's fine. I get it. Those are there to protect people from taking on risk that they cannot afford, meaning if they lost that money, they can't afford it. And that's part of the reason you saw the big banks recently shutting down credit card purchases of blockchain assets. Because if you mortgage your house or go all in on Bitcoin and the market, like it just did, drop 70%, and then you can't pay your bills and you go bankrupt, well, now JP Morgan or Citibank or Bank of America, they're sitting on the debt that you did because you basically were irresponsible. You couldn't act like an adult. And I understand those rules are in place for a reason. I get it. But at the same time, I consider myself, while I don't meet those financial requirements, I do consider myself somewhat intelligent and aware of my risk, and I don't gamble. I don't invest what I can't afford to lose. But that should be the same for the stock market. That should be the same if you go to a casino. I like gambling, but I don't mortgage my house and go all in on black or double zero on roulette and just say, maybe I'll triple my money up. Woo, let's do this. So I'm not sure what the answer is. That's a topic for a different conversation, but that's one of my frustrations is that right now they're considering everything to be a security. They haven't passed any legislation yet, but for US citizens, that means, unfortunately, I get cut out of a lot of projects because they would rather play it safe by just limiting that exposure up front. So going back, one of the other things of an example token that I really enjoy currently is the Binance token, the BNB token. The reason is I think it's built in such a way that it creates a really good economic incentive model for the users. I get a discount on exchange fees, which is great. If I want to list my token, I have to buy the BNB token. And what they did with Bread token that I really liked, who did a TGE recently, is they bought a $5 million tranche from Bread, and then they broke it into 2 piles. One you could buy with Ethereum, one you could buy with Binance token. And what was really great about this is they didn't upcharge you a service fee or anything like that. They sold it at the base price. But what it did is the Ethereum one sold out immediately, and then they launched the BNB one, which forced you to go buy and then sell your BNB in order to get Bread tokens. Now, while that's not necessarily the best use case, what it does that's really clever is it drives liquidity in the market. It forces people to buy and sell, so it keeps the flow of capital moving through their tokens. And that's a really big thing. Besides wanting it to be used in your ecosystem, it's the arcade token for your games. That's fine. But you really want to have an incentive that forces that liquidity pool to keep moving, because the worst case scenario is sitting on an asset that has no volume. Because if no one's buying it or selling it, it's worth zero. Because if you can't find someone to eat it at your price, there is no price. Some of the categories that I really enjoy, talking about those for a second, are platforms, which I consider platforms basically base level protocols that allow other products or services to be built on top of them. So I would argue Ethereum, EOS, Neo, Stratus. I'm not going to go down the whole list, but those are all platforms. I would say something like Bitcoin is not right now a platform, it's a currency, but with rootstock and other advancements, it has the ability to build into a platform if the roadmap goes that way. VeChain's a perfect example. They previously were a supply chain that have turned into a full platform with the advent of, I think, Thor Power and the secondary token that they've created. And that's fine. That's perfectly fine. One of the holy grails in the space of these platform solutions, whether it's Generation 1 Bitcoin, Generation 2 Ethereum, Generation 3 everyone else that's trying to build it, is scalability. A decentralized database is inherently slow because a central database at Facebook, for example, where they say, do you agree? I agree. Okay, we're good. That's going to always be faster. But decentralization allows for security and trustlessness. Now, the question is, in my mind, it's a slider. How do you increase scalability while mitigating how much trust we have to add in? Because taking this all to the extremes is, if you go off-chain, Lightning and Raiden, you have to trust the relayers. Now, if I'm going an atomic swap peer-to-peer, I only have to trust no one, myself. But what if I don't have a peer that I want to trade with? I need to discover a peer. That's where relayers will come in, and I have to trust the relayers to not be bad actors on the state channel. The other side of that is proof of work. If we went up to 1 billion megabyte block, only a select number of computers can use it. Now, granted, whether that's 2 or 4 or 8 megabytes, I don't care about. It's just block increases are a linear scaling solution. At some point, they won't work once the blockchain gets big enough. Again, I'm not talking 1 year, 2 years, 3 years. And I'm not going to get into semantics of Bitcoin Cash or Bitcoin. The other category I really like are DEXs, decentralized exchanges. And that's mainly because of the regulatory frameworks being different with every single government out there. Some are pro, some are con, some are not taking any steps at all. Some are doing a wait and see. And I think you're going to see more and more companies, platforms start doing DEXs that are centralized currently. So you saw this with Bitfinex making FFinex, which is an ERC20 exchange built on the 0x protocol, and the recent announcement of EOS Finex, which is awesome because what it does for them is it allows them to de-risk their exposure from a regulatory framework, and also creating no central point of failure makes it harder to shut down that type of system. And, there's Ether Delta and IDEX, AirSwap's coming out, there's Omega 1 coming out. There's a bunch. Kyber Network. There's a ton of plays all attempting to do this with slightly different variations. And that's really interesting to me. Loopring's another one. So I think you're going to see, in my mind, more traditional centralized platforms decentralized, because it also allows you to not be exposed to the risk, first-party risk of, if you get flagged for fraud, whether it's correct or not, they lock your funds. You have no control of your funds, and that's frustrating. And for a business owner, that's a huge game changer, because I can't pay my merchants, I can't pay my postage, I can't pay my bills, my employees, my general operating costs. If I'm reliant on that capital that's been locked by Bittrex or Coinbase or whoever, that's a huge problem. And the third category that I really like is supply chain logistics. If you're trying to ship something from China to the US, and it has to go land, sea, air, has to cross a bunch of jurisdictions, that's not one company shipping it for you from a manufacturer to a consumer. There's multiple parties involved, multiple companies, multiple jurisdictions, all with different rules, regulations, paperwork, and there's a ton of chance for human error. What if I forgot my bill of lading? What if I incorrectly marked when I shipped the product? What if I pass it off to a merchant and a supply chain partner who just completely didn't even mark that it was there, and then suddenly it appears in port in the US. It's an area that makes sense for blockchain, and that's also why I'm so bullish on that category as a whole. Is supply chain's massive, and I think a lot of parties will start popping up that actually succeed in the space. Hey, so I apologize about the jump edit here. This is actually a few hours later. I've been working on editing down the video so it's a little bit more streamlined, and I realized that it was probably a little too much to cover in a single video. So next time I'm going to plan on covering what my portfolio holdings are. That's a little graph right here, but like I said, I didn't want to dive too far into my first video here, so wanted to say thank you so much, and if you liked what you saw, please hit that subscribe button, leave some comments below, and I'll see you next time.